Okay, recording this video on Thursday, the 18th of March, 2021. Do hope you are doing okay. So, this video is going to be a quick how-to video on selecting the right tick chart settings for swing trading different futures markets. I had quite a few questions about this in the last several weeks, and it turns out that I've been pretty inconsistent in my choice of tick chart settings. So I had to review all of those, come up with a methodology that is more consistent, and I just want to show you that in this video. Nothing complicated, just a few charts to show you what's going on, plus a little bit of a spreadsheet that kind of summarizes the information, but I think it's kind of worth reviewing. Also, later today I'll probably put up another video on what's going on in the markets, just review some of my market charts kind of midweek, because I think we're just at a really critical kind of turning point at the moment. Want to show you what's going on there. Had such good trading this year. The volumes have been fantastic. The ranges, the speed of markets and so on. I hope you've noticed it too. Everything's kind of going great, but we need to be on the right side of the market in the next kind of swing. So I want to show you that on my charts. And then just before going on to the how-to, just a quick kind of local interest item. People like it when I talk about what's going on where I am at the moment, so this is just a little quick update. You might know, still in Kauai, north shore of Kauai, kind of having a good time here, but we have had an unbelievable amount of rain this last seems like 4 to 6 weeks, so much so that it's caused a landslide on a road just by us. So this is actually a road here behind these trees and continues here, and you can see there's been this landslide here. This is the road down to Honolulu, if you've ever surfed the north shore of Kauai, and it's currently cut off. They've kind of bulldozed this, but it's emergency vehicles only, and all the residents who are north of this point from Honolulu onwards up the north shore are currently kind of cut off and only able to get services using actually Led Hamilton's backyard to transport food and supplies across the river. Anyway, so yeah, this is we're over here in Princeville, up this other side of the road, and this is the main road that comes down here and then snakes along, kind of comes around a U-turn, and that's what happened with the large amount of rain that we had over the last couple of weeks. Anyway, just a little local interest item. So let's talk about swing trading and different tick chart settings. The reason why this is a problem for users of tick charts is that different markets have different volumes and number of trades going through them. Remember that a tick chart redraws the new bar when a set number of trades or ticks passes through. My favorite tick bar setting for example, day trading the E-mini is a 500 tick bar chart. On the longer term charts, it's a 4,500 tick bar chart. But because different markets trade with different volumes, you need to adjust the tick settings of your charts so that they give you a similar time view. Now, if you're using minute or hourly charts, this wouldn't be a problem because you would just put all of your markets up on, let's say, an hourly chart or a 4-hourly chart. 4-hourly charts, very popular with Forex traders for kind of swing trading. And you just look at all the markets on a consistent hourly or 4-hourly chart. Job done, no problem. But because we're using tick charts and different volumes and ticks go through each of the different markets, you have to make an adjustment and use different tick chart settings. So this is the way I do it. I start off with a day chart of the futures market I want to look at. In this case, I'm using the continuous contract of the euro on the CME. This is TradeStation I'm using to chart this. The continuous contract is an @EC. And instead of setting this out as a daily chart, what I've done is I've set this to a minute chart and set this to 1440 minutes, because that allows me to select different volume data for the chart. If I had it just on a daily chart, you see those settings aren't available, but I put it on a minute chart, 1440, there are 1440 minutes in a 24-hour period, and it gives me two choices here. I can either put the trade volume or the tick count on the volume settings, and I select tick count. I use the session hours, although I don't think that matters anything, and click OK, and that gives me the print below the line here. And I've got a little indicator which is a tick volume indicator. It just calculates the volume number of ticks going through on that chart and then puts on a 200 bar average. So what this is telling me is over the last 200 trading days for the euro futures contract, on average during a day, there have been 105,000 trades or 105,000 ticks. Now, I can do that on all the different markets that I'm following, exactly the same kind of settings and so on, and that gives me different readings for different markets. To be a little bit more precise though, let me just show you something. You can see here that every quarter we get this kind of drop off in volume, and that's because the roll from the current month to the next month at the expiry of a contract is, I think, dealt with incorrectly on the TradeStation platform. We get this big kind of drop off in volume because by default TradeStation is rolling, I think, 7 days prior to the expiry of the contract, and you can actually change that in TradeStation. So if you look at this, instead of just plotting at EC, what I've done here on the next chart is plot at EC equals 101XC, and that changes this so that the data is being rolled 1 day before the expiry, and in that way you can see all of those drops in volume that we had from the default contract to this adjusted contract basically go away because we're rolling 1 day before expiry instead of 6 days for 7 days before expiry, which I think is incorrect in TradeStation. It changes the data slightly, so instead of 105 average trades per day, it's 111 average trades per day. I'm not particularly worried about that. What I'm more worried about is comparing a euro chart with a British pound chart or a dollar index chart, or then a coffee chart with a crude chart and so on. So getting the order of magnitude is what's important, not the absolute number. I've updated my spreadsheet for this, but this is how I'm using the information. So if you're a subscriber to the indicators, you're given a link to this. It's the chart settings for other markets. It's a Google Docs, Google spreadsheet kind of shared document here. We can see it's actually one person, Anonymous Wolf, is looking at the document at the moment, but it kind of belongs to me and is shared with subscribers. And it gives you the chart settings that I would recommend for a whole bunch of different markets. Now, this is how the data is used. So here's the euro, come down to this line here, and what I start with is just putting in the raw data. So that's the tick count for a 24-hour period. So when I looked at this last week, when I updated this spreadsheet, the number was about 106,000 there, and then we calculate 2 or 3 different numbers here. Depending on your kind of preferred time frame for swing trading these markets, there's a couple of different ways of calculating this. Some traders like using 9 bars per trading day. That, I think, is a nice figure for the Emini. It turns out to be a 45-minute chart. There are exactly 9 45-minute bars in the day session of the Emini, so I think that's a nice kind of swing trading kind of time frame. So I've calculated that, and you're just taking the raw number here, the 106,000, dividing by 9, then rounding this off to the nearest 100. So that gives you 11,800 bars today. And then 2 other settings I'd recommend is looking at the tick count for a 2-hour period. Again, so we're just taking that raw number, dividing it by 12, or a 1-hour chart. So this is taking that raw number and dividing it by 24 hours. So this is what I've chosen now as my preferred setting for my tick bar charts for swing trading these different futures market. And the euro ends up being a 4400 tick bar chart. For the dollar index, you can see a little bit further down here, it's only a 500 tick bar chart because the dollar index is not a heavily traded futures market, but the Aussie dollar is 2200 tick bar chart and so on. So that's the tick bar settings for the different futures Forex kind of contracts. And then we've got all the other markets kind of down below here. We've got Bitcoin using the BTC USD contract, not the futures contract here. But then we've got cocoa, coffee, copper, and so on. And then crude oil here, you can see that we were trading about 201,000 trades per day. And so a 1-hour chart then is about an 8,400 tip bar chart, which I think is a pretty good setting for swing trading crude. And we've got all of these all the way down to bonds and wheat down at the bottom. So I promise going forward I will be a little bit more consistent about using these particular settings for my tick charts so that you can kind of follow along too. So a little handy kind of tips and tricks to make sure that you are using a tick bar setting that you are comfortable with. So let's go back to this euro chart. So this is the continuous contract, the euro here, and you can see this is the 4400 tick bar chart on both of these charts side by side. Usual chart setup here, we've got all the indicators to do with volume on the left hand side, which is better pro-am and better momentum. The right hand side, we've got all the indicators to do with price, which is better sine wave, calculating the cyclical activity in 3 different time frames. Now, to make sure that you're comfortable with the tick bar setting that you have chosen, you can look for 2 things. The first one is the length of the swings. And so I come down to the better sine wave chart and look just at the highest time frame. And you can see that the highest time frame here with these very thick lines is getting you into the swing of this particular trend move in the market. So we're kind of getting ready to go long when we see these supports on the highest time frame, getting ready to go short when we see resistances on the highest time frame. And you can see that this swing in the market then lasted from about the 4th or 5th of February up here to these highs to about the 12th or 16th of February there. So we're talking about a 2-week type period for the swings. So a swing trade would typically last 2 to 5 days in a trade, and so you're looking for a swing trade somewhere in this kind of trending move. Similarly, with this move, it's got a similar type length. This move on the way down from the end of February was a lot longer in its kind of length, and we could have taken a couple of chunks out of here. But that tick bar setting looks about right for the length of trade that we're interested in when we're swing trading. And the second thing I suggest looking at is to make sure that Better Pro-Am is picking up the highs and the lows. So again, we go to the same 4400 tick bar chart, and I'm looking for professional activity and amateur activity at those highs and lows. So you can see here at those lows, we've got some blue professional bars kind of coming in, nothing in the meantime. Then at these highs, some amateur bars, nothing in the meantime. On the way down, some blue professional bars at the high here, and then there's one here and a sequence here. And what you can see is that the professional and amateur activity is being seen at these important turning points around here, up here, here, these points here, down at the bottom with rainbow patterns and so on, that you're not seeing a whole bunch of different professional and amateur bars halfway through the move to kind of maybe not confuse you, but just make it more difficult to interpret where the professional activity is actually taking place. So once you've selected your tick bar setting for that particular market, I'd pull up a chart and just have a look at that and just make sure that the swings are the right kind of timing, and then that you can see professional and amateur activity happening at the turning points and not midway through a trend. So hope that was helpful to you.